Welcome to the deep dive. Today we're looking into Miss Mansi's modified take on Oliver Velez's trading techniques.
That's right. We've got a breakdown of her, well, simplified approach.
And the goal here is really to understand how you, the listener, might use these kinds of rules to, spot and manage trades.
Yeah, practical steps, not getting bogged down in super complex analysis. It's about structure.
Exactly. It seems she's taken these core ideas and kind of stripped them back, maybe for newer traders.
I think so, yeah. It feels like a more straightforward framework, focusing on price action, clear rules.
Okay, let's get into it. How does she identify potential trades? The setup, as she calls it.
Well, it's pretty direct. She focuses on simple price patterns, usually daily or maybe 15-minute charts.
And the key signal is?
It's often about stocks breaking above their 20-period moving average, that short-term trend indicator.
Oh, the 20 MA.
And crucially, she wants to see that break happen with strong volume.
Strong volume suggests real interest, right? Not just a fake out.
Precisely. It hints that the move might have some, staying power.
And she uses candlestick patterns too, engulfing patterns.
Yes, bullish or bearish engulfing. A bullish one, for example, happening after that break above the 20 MA can be a strong buy signal.
Okay, so it shows buyers stepping in with force.
Exactly. It's a confirmation signal.
Got it. So setup identified. Next up is location. Finding the right price zones.
Yeah, this is critical. She really emphasizes only trading at key levels.
Meaning support for buys and resistance for sells.
Spot on. Buying near support where prices bounced before or selling near resistance where it's stalled.
Makes sense. And for day trading, she uses the opening range.
The high and low of the first, say, 15 minutes. Those levels can act as important intraday support and resistance points.
Okay, provide some boundaries for the day's action. Now, state understanding the market's behavior, she keeps this simple too.
Very simple. Basically just two states. Trending, where price is moving clearly up or down, and ranging, we're just chopping sideways.
And how do you tell which is which?
Mostly by looking at the slope of that same 20-period moving average.
Okay. So sloping up means bullish trend.
Right. Sloping down, bearish. And if it's flat, you're likely in a range.
Nice and clear. Avoids overcomplicating things.
Definitely.
So you've got your setup, the location is right, you know the market state. Now, entry. Getting into the trade itself. Confirmation is key here, I gather.
Absolutely key. She stresses waiting for confirmation, so not just buying at resistance, but waiting for a clear break above.
Or below support for a sell.
Exactly. Or, if you're in a trend, maybe waiting for a little pullback to that 20 MA.
And then look for a reversal signal, like another candlestick pattern.
Precisely. Like a small bullish candle forming right at the MA after a dip in an uptrend. That's your trigger.
Okay, so there's a specific trigger moment. Now, protecting yourself, the initial stop, the stop loss.
Crucial part. The stop goes just beyond that key level you identified for your location.
So if buying a near support at, say, $50, the stop might be just below that, like $49.50 or something.
Yeah, just giving it a little room, but defining your risk clearly. And she's really big on limiting that risk.
Like the 1% rule.
Often, yes. Risking only a small, fixed percentage of your capital on any single trade. It's fundamental risk management.
Keeps you in the game. Okay, what if the trade works? The add phase. Adding to winners.
Yes, but she advises doing it cautiously. Only add to trades that are already showing a profit.
Right. Don't add to losers.
Never. And ideally, wait for another pullback, perhaps to the 20 MA again, if the trend is still strong.
And use smaller position sizes when adding.
Yes, that's important. Adding smaller amounts helps manage your average entry price and overall risk exposure.
Smart. Okay, eventually you need to bank those profits. Profit taking, what's the approach?
She suggests having clear targets. They could be the next major support or resistance level.
Or using a reward to risk ratio.
Exactly, like aiming for twice the profit compared to what you initially risked. A 2-to-1 ratio is pretty common.
So risk $1 to make $2?
That's the idea. And she also mentions taking partial profits.
Locking some in along the way.
Yeah, sell a piece of your position at your first target, perhaps. It secures some gain and reduces stress.
Makes sense. And finally, management. Protecting those profits once you have them.
This involves actively managing the trade. Trailing your stop loss is a big part of it.
Moving it up as the price moves in your favor.
Right. Move it to break even once the trade has moved a certain amount. Then maybe trail it below the 20 MA or recent lows to lock in profit while still giving it room to run.
And maybe scaling out further.
Yes, selling off more pieces as it hits further targets potentially. The main thing is sticking to your plan. Discipline is key.
So pulling it all together, what makes this modified approach potentially good for, say, beginners or those wanting simplicity?
I think it's the focus on just a few core tools, the 20 MA basic candles, clear support resistance.
Less analysis paralysis.
Exactly. And the very clear risk rules, the 1% risk, the 2.1 reward target, they give you a solid structure from the start.
Fewer market states to worry about, too?
Right. Just trending arranging. And limiting how you add to trades keeps the risk management side simpler as well while you're learning.
It really does sound like a structured, rules-first way of thinking about trading. Focus on clarity, manage the risk.
That seems to be the essence of it.
So a final thought for you, the listener, to mull over. How could bringing a structured, rule-based approach like this, even a simplified one, potentially change how you analyze or engage with the markets?
Yeah, what parts of this framework resonate most with you right now? Is it the entry rules, the risk management, the simplicity?
Something to think about. That wraps up this deep dive. Thanks for tuning in.